If you're looking to buy Palantir stock, then please keep watching this video because we're going to look at the company's recent news, how the market is treating the company, and what are the technicals telling us. And in the end, we're going to try to find what is the best trading approach for the time being. As the market remains volatile, we should always be careful about which positions we pick, as well as their individual timing and exposure. So, when it comes to Palantir, it has been able to trade around $15 and like $16 or so, and really getting ever closer to the ceiling of 16 as I'm recording this video. Reaching that level would be a massive psychological boost for the market participants, and it means that the momentum that has been triggered by the financial results of the second quarter are definitely here to stay, and that the narrative is now looking once again for any snippets of positive news to justify new entries. This time it is caused by the new public sector contract of $250 million. The market overall remains relatively positive and even bullish towards Palantir, giving it definitely one of the most praised on, or has one of the biggest followings in the market. And the recent development is really a massive upvote in confidence. That being said, let's also take a look at the technicals. The trading volume of Palantir is around 67 million shares versus the average volume of 48 million shares. Over the past 52 weeks, the price fluctuated between $5.84 and $20.24. The volume of shares traded tells us how many shares are being bought and sold at any given point in the market, if there's enough liquidity to support a trading strategy. If the float is thin, it would be easy to influence the stock price. But low quality could also mean that the demand is limited as well. When we compare the current volume against the average volume, there might be the possibility for trend reversal or breakthrough if the difference is very large. For instance, if the stock were to break through, the current volume could be significantly higher than the average volume. The market cap of Palantir is currently $32 billion versus an enterprise value of $15 billion, so the premium is around $17 billion. As we compare the current price to the historical price fluctuations, the stock is 15% higher than the 1-month low, 15% higher than the 3-month low, and 170% higher than the 52 weeks low. On the options market, which gives us a hint of the market sentiment on where the stock price can go next, the implied volatility is 56% compared to a historical volatility of 62%. So the put-call volume ratio is around 72%. And remember that it's normal for many stocks to have a higher put option volume than what they deserve, because many institutional investors hedge their long positions by buying put options. The most recent volume of options traded is 388,000 contracts a day versus the 30-day average of 251,000. In terms of open interest, the most recent volume of open interest is 2.6 million contracts versus the 30-day average of 2.6 million contracts. Regarding the shareholder structure, institutional shareholders own 36% of the float. Now, the biggest shareholders include Vanguard, Renaissance, and State Street. For me personally, it's always good to see some institutional participation when holding a stock long-term, because it does offer a layer of stability and a token of reliability in the medium to long term. It means that the market believes that Palantir can deliver more value in the long term, which is a very important factor to consider for investors. I personally believe that a minimum threshold for long-term investment should be around 25 to 30% institutional ownership. There are, of course, many exceptions to this rule. There are still many great companies, mostly owned by retails as well. The current short interest is 8% of the total float, with 46% of the transactions coming out from the dark pools. Usually, if the short interest is about 15% of the total volume, and a significant portion of the short volume coming out from the dark pools, it could suggest that there are institutional positions taken to short the stock and that there would be potentials for a short squeeze. So, right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and declined quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions, instead of choosing ETFs. My recommendation overall is to buy Palantir in small batches, keep the position open for the next couple of years. The company still has more potential to be fully recognized, and despite the upcoming ups and downs, Palantir is likely to remain a key participant in the big data analytics industry. Overall, I would recommend to commit eventually 3 to 5% of your portfolio in Palantir.